Right, oil just hit $5 right now. When I woke up, it was 15. The markets are just crazy today. I mean, everything else is kind of okay. The Dow is down about 200 points, but not that crazy. Oil is crazy. I've been spending my stay-at-home month trading stocks and dabbling in a few other things like oil and crypto, um, and usually losing money, of course. And today is no exception. Let me just tell you what's on the screen here. It's the price of crude futures from May 2020. We'll just focus on the big screen for now. And we see 4 months of prices here. I took a gamble on the oil market. Just as a brief history on prices, West Texas Intermediate averaged about $57 last year. It was hovering around 45 in the beginning of March, and by that point there was already reduced demand from China, Korea, and the rest of Asia, which had already shut down. On March 9th, when the US stock market crashed, oil crashed to $28 a barrel. It bounced above 35 during the brief rally, along with stocks and everything. Then it bottomed out around 20 or so. Trump sent out a tweet, a hopeful tweet about the truce between Russia and Saudi, and it skyrocketed to around 27. And at that point, I entered a short position. Prices rose briefly to about 29, leading up to the meeting. And then when the Saudis and Russians had their meeting, it was widely expected to cut production and increase prices, but they didn't quite cut enough. And oil prices dumped to about $20 a barrel. And then it remained steady a little bit until this weekend came around. When I woke up this morning, oil was at 15. It's now down to around 450 or so and tanking. Let's just look at the prices for a second. Is it going to hold at 450 or going to go dip further? Here, we'll zoom in a little bit. So these are, we were looking at the daily candles, and let's change it over to 1 minute candles. All right. All right, this is about 4 hours of prices, going back to 10 a.m. New York time. So we're looking at the last 4 hours, and you can see the steep drop beginning around noon this morning. It bottomed out at $4.05 and then has bounced up a little bit. Looks like it's on its way up. I feel this is a kind of a bounce. Like, what do they call it? A dead cat's bounce or something like that? So you drop a dead cat, and then it bounces from $4 to $5.60, and then maybe it falls back again. We'll see. Now, I'm not much of a trader, and I'm not going to provide any technical analysis in this video. I just have the chart up because I think it's so fascinating to see how the prices move. It is just so fascinating, and I'm excited to see history in the making here. I mean, these kinds of prices are completely unprecedented. I think the last time prices fell below $5 was in 1973. I think they hit around $4 back then, but that's like $25 in today's inflation-adjusted terms. That was the year of the big oil crisis due to the OPEC embargo, and prices jumped from $4 to $12 a barrel. Okay, let's get back to the charts. So I assume most of you are new to trading. I am as well, so bear with me here. Here's how the oil markets work. You trade futures contracts. So these are contracts for delivery at a future point in time, hence futures contracts. There are two main types of oil on the financial markets. WTI, or that stands for West Texas Intermediate, and this is a light sweet crude delivered in Cushing, Oklahoma. It is light, meaning it's thin and liquidy, as opposed to kind of the thick, gooey oil you get from the oil stands. And it is sweet, meaning it has low sulfur. It is a good grade of oil due to ease of refinement. It's pretty easy to refine and get all the liquid fuels you need for transportation, etc., and everything else you need for your day-to-day life. So this price is the benchmark for US oil. It is the most traded oil on the financial markets. It's traded on the New York Mercantile Exchange, and it is the price you see here. The other main oil is Brent crude. It is the benchmark for oil produced in Europe and Middle East. Brent doesn't have a delivery point. It is delivered on a ship. It is also light and sweet, like WTI. So from these two grades of oils, there are kind of premiums and discounts depending on the specific grade and delivery points around the world. There are over 1,000 different types of oils, but from these two benchmarks, you can derive the price of the rest of them. So these two are the ones that are mostly traded on the financial markets. Brent crude usually trades around $6 or so higher than West Texas Intermediate. But today, Brent is actually quite stable, around $27, while WTI seems to be tanking. The two I have on the screen are both West Texas Intermediate oil. Left is for a May delivery, and right is for June. May contracts settle on April 21st at 2:30 p.m. Today is the 20th. So if you still have a contract in your hand by tomorrow, you will need to physically take delivery of the oil. So that's how futures work. So you might be wondering, how do you actually buy this oil, right? In short, you can't really. I suppose if you have a huge tank, you can drive a truck to Oklahoma, pick it up, and sell it next month for $22. That's a 3x profit. Or you can wait a few more months and hopefully sell it for $50 or even more. But if you can't get to Oklahoma, then you got to hire somebody to drive for you or pay fees to a pipeline operator. So you as a normal person and me as a normal person, how do you invest in these futures? Well, it's pretty hard. One contract represents 1,000 barrels of oil. That means you must buy in 1,000 barrel increments. So if the price changes by $1 per barrel, your profit or loss is 1,000. So because of that, the brokerage will have high margin requirements and you will have to demonstrate you can handle the risk. For traders outside the US, there are other products available. But with US brokerages, you can't trade CFDs and it's hard to find small contract sizes. Some of the brokers do offer 500 barrel E-mini contracts, but that's probably the smallest ticket size you'll get. So the easier way is through ETFs, exchange traded funds. They employ different strategies with different oils at different maturities. Too closely, but they are an easy way to get exposure to the oil markets. They tend to have lower volatility, but I think this crash might derail some of them. And it might not be the best long-term strategy. There are other ways to do it, such as buying shares of oil companies, but that opens a whole other can of worms, and we'll discuss that another time. It's really up to you to do your research and determine the right strategy for you. It looks like the prices are holding pretty steady, but it's only been a couple of minutes. Let's just see what happens. I'm going to speed up the video for a sec so you don't have to stare at the chart. Whoa, it just cracked $4. Last time prices hit below 4 was back in 1973. But that was 4 in kind of nominal dollars. If you adjust it for inflation, that's around 25 in today's dollars. So the oil prices in 1973 weren't too bad. Man, the prices really dipping. Whoa. I wonder if it's gonna hit zero. Some blends of oil have hit negative already. Wyoming asphalt hit negative in mid-March, I think about 5 weeks ago. And Canadian oil sands have been in the single dollar range over the entire month. It's getting dangerously close. It's getting dangerously close. Before talking about the trades, I want to go on a little tangent. I'm a little bit worried about what this means for the world. This is going to be hugely challenging for the green movement. When the world gets moving again, consumers will buy cheap gasoline cars, airlines will fly empty planes, not because so few passengers will want to travel, but because fuel is so cheap. They can just fly an empty plane around the world without worrying about their highest cost. Maybe this is the beginning of the green movement. I don't know. Most US oil producers need at least $50 a barrel or so to survive. Shale oil from the US, oil sands in Canada, they need that. A few years ago when oil prices were high, we were excavating oil sands at a cost of $80 a barrel. That's 80 just to break even. But if oil was over $100, that was still profitable. Futures for the rest of the year are in the 20 to 30 range. And that means North American oil will not be profitable. On the other hand, Scandinavia can produce for just 15 or 20. Middle East as well. So this will largely hurt the US and Canadian oil industry, while Europe and the hub, the Middle East, is far less affected. So will North American drilling stop, or will we focus on green energy? Or will the Middle East gain the upper hand? I mean, will they reclaim their title as the world's leading energy producer and have the rest of us on a leash? I really don't know which way this is going to go. I hope that low oil prices don't hurt the progress we've made in green energy. But this could really change both the environmental economics as well as the global balance of power. I mean, why is oil so cheap right now? I mean, it comes down to supply and demand. Oil producing countries and companies are trying to reduce their output, but they just can't keep up with how fast demand is dropping. I mean, the world has kind of hit the brakes, and it's completely stopped in terms of movement. Factories shutting down, people staying at home and not getting into their cars. Planes are on the ground. I mean, we've seen the same. You know, you and I, we've seen the same pictures posted on social media of all the grounded planes at all the airports around the world. So what to do about this excess of oil that's being produced right now? I mean, if we produce a lot, we can't exactly store all of it. But dropping demand is only a part of it, right? There's a price war going on between Russia and Saudi Arabia. This price war has compounded the effects of coronavirus. So there was a meeting a week ago today between Russia and Saudi Arabia agreeing to a 9.7 million barrel a day supply cut. Mexico, I think, cut an additional 100K, but that's a drop in the bucket. I mean, the markets globally were expecting more cuts. They didn't expect just 9.7 million. So they are essentially continuing their price war to drive smaller producers out of business. Whoa, okay, the oil just dropped down to 250. This is crazy. This is just crazy. I am blown away. I mean, this is all because of a massive oversupply of oil. And really we don't know where to put it all. Globally, we produce about 100 million barrels a day. So about 35 million by OPEC, about 10 coming from the US, and then about 55 or so coming from the rest of the world. But we also use that much. Supply and demand are precisely in balance. I mean, it's actually really precise. Last year, I think we produced about 100.6 million barrels per day. We used about 100.7 million. So it is really precisely balanced. But for the first time in over a decade, we expect a decline in global production. The US EIA, that's the Energy Information Agency, predicts about a 5% annual global decline to about 95 million barrels a day, averaged out across 2020. The IEA, the International Energy Agency, predicts a more modest, maybe 1 to 2% decline, with most of that decline coming from China. But that's kind of averaged out over a year. We have the better part of the year ahead of us. We can't exactly store all the oil that we're producing now until the end of the year. I mean, we might need oil in December for sure, but we have too much oil right now, and the imbalance is severe. 100 million is still coming out of the ground every single day, but only about 70 million or so is being used, and the rest of that 30 million needs to go somewhere. We have somewhere between 0.9 to about 1.5 billion barrels of storage capacity left in the world. And at the delivery point for West Texas Intermediate, the tanks are full. They're completely full. Now, these are not large tanks. They're just tanks that hold oil for a brief amount of time until they're routed for shipment. But because there's such a glut there, the prices are tanking right now. Before COVID, we actually expected an increase in oil prices this year. I mean, due to declining refining capacity and then a cut in production from Libya. Libya has completely stopped producing. Last year, Libya produced about 1.2 million barrels a day. Now it's just about zero. They have a civil war going on, their ports are closed. But non-OPEC countries, including the US, are producing a little bit more than last year. But that, for the US, might not last much longer. And this collapse here, and this crash here, is going to be a huge blow for President Trump. He's been trying to protect the industry. I mean, he does not want cheap oil prices. Even though everyone says they want cheap gas for their cars, cheap oil does not help the US economy. So he's been backing moves by like OPEC and Russia to cut production, and he's been kind of pushing support for the US oil industry. Because of shale, The US is now the largest single oil-producing country in the world. I mean, OPEC produces more as a group, but US is its largest single country. But this brief US dominance is really going to be crushed. I mean, I don't know if you remember the tweet from Donald Trump that just sent the oil markets flying. It was on April 2nd. Let me just read it for you. He says, just spoke to my friend MBS, who's the crown prince of Saudi Arabia, who just spoke with President Putin of Russia. And I expect and hope that they will be cutting back approximately 10 million barrels and maybe substantially more, which if it happens will be great, in all caps, for the oil and gas industry. As soon as that tweet came out, oil prices jumped by 25%. And then he sent out another tweet saying maybe it'll be 15 million. Well, Putin and MBS, they had their meeting on April 12th. And then Trump tweeted out, "This will save hundreds of thousands of energy jobs in the United States. I would like to thank and congratulate President Putin of Russia and King Salman of Saudi Arabia." Well, look, sorry, but this won't make a dent. It won't do anything to save oil prices. I mean, just look at the chart. $2 now, crazy. This is just crazy. I mean, this is not going to make a dent at all. And this is going to be detrimental to the oil industry. 150,000 jobs in the American oil sector, and many more supporting the oil sector, and many more jobs in Canada, and much of it in rural areas where fewer other opportunities exist. But while we're looking at this chart and the price is tanking here, I mean, I want to clarify for just a brief second. Oil prices haven't necessarily crashed. US oil prices have crashed. So Brent crude is relatively steady. I mean, prices fell about 5% today to about $27 a barrel. But it fluctuated a bit last week, and it was at 27 last Thursday as well. So, and meanwhile, West Texas Intermediate, the oil on this chart here, that's hitting $1. $1. So the last time we had oil below $2 was back in 1943, I believe. It was $2 in nominal terms, but if you adjust it for inflation, that's about $20 in today's terms. So, I mean, it wasn't really cheap. Right now, this is fucking cheap. This is crazy. This is just crazy. I wonder if it's gonna go below $1. This is just crazy. Wow. I mean, this is just crazy. Meanwhile, Brent crude is still steady. And that is the most widely used benchmark in Europe. So the entire industry is not crushed. And West Texas oil is always slightly cheaper than Brent, about $5 cheaper. I mean, this sort of situation right now is highly unusual, but it is not unusual for West Texas to be cheaper. And the reason is because, well, is delivered in Oklahoma, in the middle of the US. So this does not actually mean you can get oil for $1. I mean, when you add in storage and piping and shipping fees, it will be somewhat similar to Brent in price. And the anticipation here is just crazy. Like, going back up and down, hitting $1 a couple times. It looks like there's a little bit of a support there, bouncing up and down from the dollar line. $1.04. Oh gosh, I wonder. This is just crazy. I'm just gonna stare at the prices a little bit. This is just, I am blown away. $1.04 again, hitting $1.04 again. Gosh, what's gonna happen? Oil has crashed, everybody. We're in truly uncharted territory here. We've never had negative prices in the history of the futures markets. I mean, there have been negative prices in some local markets, but this is a truly historic moment. Wow. I feel like I should grab a beer and celebrate. You know, when you're watching soccer or football, if you live in the non-American part of the world, uh, and the announcer yells "goal" when they goal. This is kind of that moment here. Now, I mean, I don't really think this is a reason for celebration. You might be super ecstatic, or you might be in tragedy right now, depending on which side you're on. But this is a truly historic moment. I am blown away to see this. I had to stop the video because my computer just ran out of space. I was recording the screen using a screen recorder, and I didn't realize how much space it takes up. But wow, I can't believe it just went below zero. That is absolutely nuts. That is just completely nuts. I mean, this has never happened ever in US oil history. I don't know about the rest of the world. I mean, I'm going to assume for any of the major benchmarks, I mean, I don't think they ever go below zero. This is just absolutely crazy, and it's just a free fall now. Now that it got to zero, it's just dumping. People are like -2, -4. So if you go show up, they will pay you to take oil. Yes, they will pay you to take oil. Just get a big ass truck, drive out to Oklahoma or one of the many other delivery points throughout the U.S. or throughout the world that's traded on this benchmark, to be honest, and just pick up some oil, and they will pay you for it. I mean, this is really the first time that U.S. oil hits negative. It's a massive sell-off. I mean, what does this mean, by the way? I mean, why is it falling? Sure, I mean, there's one aspect of lower demand that has brought down oil prices. But as you can see on the right side of the screen, the June futures are still relatively stable. It's at around $21, right? So they are expecting oil prices to come back up again in June and in future months. But for now, for May, a lot of people are holding contracts that they can't take delivery of. So this might primarily mean speculators and market makers and such, who thought oil was cheap, so they bought it a few weeks ago. Hey, 20 bucks is so cheap. Let's just buy some oil and hope prices go up. But end of the month, prices didn't go up, and they must sell the contract if they don't want to take delivery of it. So end of month approaches, and they are panic selling. There are no refiners who want to buy the oil, no storage companies. I mean, nobody who wants to buy the oil. And so these speculators must just sell their contracts at a loss, at a negative. Because in the futures world, if you have the contract, you must take delivery of it. You must, all right? I mean, the oil is gushing out of the ground in Texas or in Saudi Arabia or wherever around the world continuously. This 100 million barrels a day is gushing out of the ground, and most of it cannot really be stopped. I mean, you can't just kind of put a plug in the ground. Once you drill the well, the oil is coming out for the life of the well. So you have to take delivery of it, and then you have to use it, or you have to put it somewhere. I mean, it just can't be left alone. If you are a physical buyer, great. You now have to go drive your truck there and pick it up, essentially. Or if you have it held in a brokerage, then they'll most likely just close it out for you and you'll have to take whatever price is available at that time. So for most of these investors, they've probably paid a higher price for these futures earlier, and they'll be suffering a loss. But it's entirely possible the price jumps dramatically in the last few hours. Who knows? I mean, we're in completely uncharted territory. So we'll just have to see what happens as we inch towards settlement. But I gotta tell you something. This does not mean that oil is free. These are benchmark prices. Then from here, specific oil will trade at a discount or a premium to these prices, depending on what and depending on where. And then from there, you got to add in refining costs and just distribution costs and everything. And then the gas for your car will not be free. The price you see here on my screen is West Texas Intermediate delivered in Cushing, Oklahoma in May. I mean, the markets are just nuts right now. I mean, this has no sign of ending. It looks like it's just tanking. And Bitcoin just dropped like $400 today. The Dow just dropped another 200 in the last hour or so. Wow. It is just nuts. It's just nuts. Well, let's just see the price move a little bit more. I'm gonna pause my talking for a bit while we watch it slide. This is just, I am really blown away. All right, I think, wow, we've cracked the 30. Did we hit 40 or not quite? Okay, that is just crazy. That is just crazy. I mean, this just possibly can't be true. I mean, negative $40 for a barrel of oil. A barrel, by the way, is 159 liters. I mean, this is crazy. We are living in history right now. Okay, bounced up a little bit. Let's see how it goes. Let's see how low it goes. But to be honest, I mean, I think this oil crash today is a fluke. Sure, we have low demand, but that does not justify negative $40. I mean, this is because of overcapacity, but that is compounded by the fact that we've had financial speculation and this upcoming settlement date that was not really planned for. A lot of the major oil funds are rolling over right now. That means they're investment funds, and their goal is to hold a portfolio of oil, not actually take physical delivery. So they'll be selling off their May futures and buying up June and later futures in order to balance their portfolio. And this would lead to a huge excess of May futures on the market right now. I mean, in normal months, in normal situations, this is okay. The spot market kind of balances it out, but this is a highly unusual month. I think a lot of folks were just hoping that the price would rebound at the end of the month, and I think a lot of people were underestimating kind of the overcapacity and oversupply on the market. Um, so throughout the month, speculators were kind of hoping on the dollar, about $20 being the bottom. I mean, because that's kind of where I saw it. Maybe it would dip down to 16, 15 or so, but I did not think it would dip further than that at all. And so anybody with this mindset would have bought up contracts at around $15, hoping to sell it for 20, let's say. 20 is still super low by historical standards. I mean, I think the last time we hit 20 bucks was back in '99, maybe. So that's still pretty low. And anybody who was kind of speculating long on oil, they would be crushed today. It's the last day of the contract, and there's nowhere for that oil to go. I do think oil prices will stabilize. Um, I mean, not as high as we've had in the last year or two, but a bit higher than today for sure. Um, my guess is that we'll probably hit the mid 20s for the rest of the year, and then maybe it'll climb back up towards the end of the year. The U.S. EIA, Energy Information Administration, has forecasted an average price of $29.34 for the year and $41.12 for next year. So at those projected prices, I think we might reach kind of historical normal levels within a few years. And I mean, even in the immediate term, 2020 to 2021, those prices won't exactly support flying around empty planes around the world, or just buying a Hummer for your driveway. I mean, it's not the pennies that we have today. But these prices would be too cheap to sustain the US oil industry. I think we expect about 500 to 1,000 oil exploration companies in the US to go bankrupt this year. I mean, these are folks who need a price above, you know, 30, 40 bucks to survive. And we're not just talking about the big shale oil producers, right? We're talking about farmers who might just have a rig on their land, trying to support their families. When milk prices are low, at least they make money on their oil well. But not now. And this is absolutely worrying. I mean, I don't know if this is a boon or bust to the green movement, but one thing that is for sure is that a lot of Americans will be hurt. And OPEC and Russia will gain the upper hand on American oil producers. And the political balance will definitely shift a little bit away from the US's favor. And when I say US, I don't just mean the US. I mean the world benefits from more diversity of energy sources, whether it's a diversity of uh, oil producers or a diversity of alternative green energy sources. And sustained cheap oil prices simply cannot support that. And that is just absolutely worrying. But it looks like prices are creeping up a bit. I mean, It hit negative $40.32, it looks like here, but it's creeping back up. Let's see how it creeps up in the next couple hours as we hit settlement time. It's very negative, and this is really history in the making. And I'm super excited that I got to see history being made in front of me. I'll sign off now, but I'll let the ticker continue a little bit. This is a crazy time to be trading. So whatever I said today, I am not your financial advisor or your investment advisor. I, of course, need to include this disclaimer at the end. I am also not teaching you how to trade or anything like that. I am just excited by this historical price movement. This is not a trading video nor an instructional video. I'm just sharing with you my thoughts on today's oil prices. Thanks for listening, guys. This oil crash is once in a lifetime.